All right, welcome everyone to VISOA's webinar today. I'm just going to quickly introduce Shawn Fehr from Seafirst Insurance. Shawn, tell us a little bit about yourself and we'll get started.
Sure, thank you so much, Wendy, and good evening, everyone. Sorry, this is kind of a strange thing. I'm actually just looking at myself, talking to myself. That's just what it looks like, so it's a little bit odd, but I'm sure we'll get through it. As Wendy said, my name is Shawn Fehr. I'm the Vice President of Commercial Insurance at Seafirst Insurance Brokers. Seafirst is a Victoria brokerage, been around for 40 or 50 years in the Victoria area. Got 6 offices, so we're spread out nicely on the South Island, although we write business across the province. Personally, I've been in the business for 29 years now, and I've spent my entire career in Victoria. So I've grown up in Victoria in the insurance world, and I know this area really well. And I've got a large portfolio of clients, including many strata properties. So I've been submerged, I guess, shall you say, in this market for quite a long time. So I'm hoping that tonight I can try to give you some idea and understanding of what's going on in the insurance world related to strata properties. And actually, just a point on that, what you're seeing related to strata properties is not unique just to stratas. The changes that you're seeing and the market conditions are true pretty much for every kind of product in insurance right now. So it's not just stratas that are being picked upon. So hopefully I'll be able to give you a general overview of what's going on. So just to, as Wendy mentioned, the plan for tonight would be to go over some of the talking or discussion points that I created related to the insurance market, and then leave some time at the end for questions. So I'll try to make sure my timing is good on that to be able to take a few questions. And please, I can't answer specific questions related to your a specific situation. So if you can keep things general, then that would be better. I don't want to comment on other brokers' policies or anything like that. That's not really fair. So we'll just focus on the big picture. So having said that, then I guess to start things off, to understand insurance, I think one of the most important things to realize is insurance is a global product, and that basically means that whenever a situation happens in another part of the world, it could come back and affect us here in Victoria. So with that in mind, when you look back over the last 15 years, there's been some really big losses, really big events that have occurred that have sort of led us to where we are right now. So insurance is a cyclical sort of a phenomenon, which means that the market hardens and then it softens, it hardens and then it softens. And we're experiencing the hard market right now. The last real hard market occurred in 2003 after the 9/11 event. And that hard market saw rate increases and deductible changes and things overnight happen that caused damage to that market for about 3 years afterwards. It didn't actually fully recover from that until about 2007. And then after 2007, there was quite a period of relatively softness. So for the last 14 years or so, it has been relatively calm. And in those calm conditions, that means there's a lot of insurance companies that are in the market. They're wanting to write business, and they are willing to compete for that business. And whenever you have supply and demand act like that, then what you're going to get is a period of pretty soft rates. And by soft rates, I mean low rates. So what's happened in the last 15 years worldwide, when we look at global situations that have occurred, I can speak to the last couple of years where there's been significant claims, especially in 2018 was one of the most significant lost years in the insurance world history. So in 2018, I don't know if you recall, but there was Hurricane Michael in Florence, there was flooding in Japan, in India, there was earthquakes in Japan and in Indonesia, there was volcanic eruption in Hawaii, there's wildfires in California. There was all kinds of, those are sort of global events. And then in Canada even, there was quite a lot of rainstorms and flooding in Ontario and Quebec. Grand Forks locally in BC was underwater, the downtown was underwater. And even on Vancouver Island, we had a significant rain event in December of 2018, of which I know Seafirst is still paying out claims related to that storm. So all those events, when you look at them in the big picture, those all add up to some significant claims dollars that were paid out by the insurers. Fast forward 2019, I won't go through all the details of that, but 2019 saw about $40 billion in losses from catastrophic events. So when I say 40 billion in losses in 2018, it was 79 billion in losses. Those were catastrophic ones. Those weren't counting the losses that occurred individually in the strata related to maybe a fire or a broken water pipe or some other kind of loss like that. So the events that I'm talking about are the large catastrophic ones. So when you add it all together, what it means is that the insurers have been paying out some really big losses over the last few years. So when all those claims are occurring, as I mentioned, the insurance company is paying out those claims, and they have to look at what they're bringing in a premium as a result after they pay out their claims. So if there's an imbalance there, that is, they're paying out more in claims than they're bringing in a premium, then their underwriting profit, which is what that ratio is called, is not working properly. And that's normally they can withstand a loss in the underwriting profit because they can take their premiums that they collect and they invest them, and they get a good return on investment from whatever they're investing in. But right now we've got the double whammy happening where investment income is next to zero, and combined with a bad underwriting loss. And what you've got is insurance companies that are unprofitable or unable to make a profit. So in order for them to be profitable, and believe me, we want profitable insurance companies to be there to pay losses that occur. In order for them to become profitable, they have to make some changes. And so what they've done in the last 18 months or so is start really focusing on the types and classes of business that are profitable for them and figuring out the ones that are unprofitable for them. And unfortunately, strata business has ended up on the unprofitable side of the ledger. And so what we're seeing right now in general is a reaction to the unprofitability of strata business. So I'll get in more of the effects of that a little bit later on, but just to sort of give you a preview of that. Now, and I also wanted to mention that this market was happening, the hard market was happening before COVID started. COVID's really, it's come along and it's definitely had an impact, and it will have an impact going forward. But the market was changing and hardening probably 6 months prior to COVID actually coming in. So if anybody comes and says it's all COVID related, that's not true at all. COVID has exacerbated the situation. And I can say that to this point, losses related to COVID are estimated at about $80 to $100 billion in losses already related to COVID. The other component of that is the investment income is certainly not improving under COVID. I don't know how your investments are doing, but I know mine have been reduced significantly over the last couple of months. So again, a situation is not, the COVID is not helping the situation at all. So it's something that we're going to have to work through, I think, for a longer period of time as a result of COVID. So when we're talking about rising costs, specifically related to strata insurance and the reasons for that, as I mentioned previously, insurers are analyzing their books of business and they're trying to determine which classes are going to be profitable for them. Stratas are, again, haven't been the most profitable class in the last few years. And so what's happened with that then is you've got insurance companies that have decided to leave the insurance market, or leave the strata market, sorry. And there are some like Lloyd's of London syndicates that have actually pulled right out of business in Canada as a result of this. There are other insurance companies that have decided they won't write business on Vancouver Island, and that's anytime there's a lack of insurance companies, we go back to the problem of supply and demand. So if there's a large demand for capacity to write business and the insurers are not there to write it, then that supply demand dictates that rates are going to go up as a result of the companies that are staying here. They need to be able to justify staying here and writing strata business, so they charge higher rates in order to be here to do that. Rating on Vancouver Island is particularly challenging because we are on an island living in a really active seismic zone. So insurance companies need to purchase reinsurance coverage, which is basically insurance for insurance companies, in order to cover the possibility of an earthquake occurring. So that adds additional costs onto the any kind of business that's happening on Vancouver Island. So that earthquake loading, in addition to the vacating of insurers, on Vancouver Island, we're in a really unique situation where it's really difficult to actually find insurance companies to write business here. The other component that is really difficult right now is insuring large properties that, multi-level buildings or significant townhouse developments, anywhere upwards of $20, $25 million. If you've got stratas that are in that range, there's very few brokers that are going to be able to piece that together for you right now. And that is simply because there's fewer insurance companies offering the capacity to write that. So by that I mean, if you have a $25 million complex, you might only be able to get, an insurance company might be able to offer a $5 million line. So you would actually need 5 insurers to write a $5 million line in order to place that account. And there are getting to be, like I say, fewer and fewer insurers that are willing to write it. So it's really hard to get 5 insurance companies to write $5 million lines. So that's really exacerbating this problem as well. I will say on Vancouver Island, we also have had a bit of a history, I guess, shall you say. Our rating on Vancouver Island has been very low for a long time. Very low compared, it might not seem like it to you, I know you're paying the premiums, but if you go to Vancouver or Seattle, which are 2 areas that are sort of in our territories, the actual rates that they see in those 2 areas are probably at least double what we were paying in Victoria. So we have been lucky for a long time here, but right now it's a little bit of catch up that the insurers are doing on Vancouver Island when you see your rates going up. But I can guarantee you the rates that you're seeing are still nowhere near what they're seeing in Vancouver. They're really getting hit hard over there. So I'll talk a little bit more about those situations a little bit later, but I'm just going to move on to sort of the next discussion topic because I'm conscious of the time and just want to make sure that I leave time for questions at the end. So one of the questions that Wendy asked me to speak to was what information is required to actually obtain an insurance quote, which is a really good situation right now, or a really good question right now, because there's a lot of, obviously, every strata is going to run into either increasing rates, increasing deductibles, or maybe your broker is not able to place coverage for you at all. So there's going to be situations where you're going to need to go out to market in order to see if you can get alternative terms. So when I'm putting together a proposal to send to underwriting, I'll just sort of highlight the key things that that the underwriters are looking for. So the information required, first of all, obviously the location address, and that's important to give even the postal code. And postal code is something that's interesting because we've got technology now where from the 6 digits of the postal code, we can actually pinpoint the soil conditions of that 6-digit postal code location. So if we were insuring, a property in downtown Victoria versus, well, I've actually seen it where on one side of the street, the rating is whatever it is, but then on the other side of the street, the rating is considerably higher. And so it's, when you look back at it, you can see that the higher rate, it was identified that particular location had a higher earthquake exposure. So it's, and the other property was probably sitting on bedrock. So when those sort of situations occur, it's really actually quite interesting to be able to dig that deep into the analytics to be able to come up with an appropriate rating. The more information besides the location address, we also will need to know the current insurer and the expiry date of the current policy. And obviously expiry dates, we need to know deadlines, but the current insurer is important because, as I mentioned earlier, the number of insurers that are available to write strata insurance is getting fewer and fewer. So we need to make sure that if you've got multiple insurers on the policy right now, there may not be the opportunity for a broker to quote on your policy because those insurers may already be on the policy. So we need to be able to identify what insurers are there, and so which ones we have available for us. Now, different brokers have access to different insurers. Seafirst, for example, we deal direct with Lloyd's of London, and we have exclusive contracts. So there's an advantage for us, and I'm not selling anybody, I'm just saying there's an advantage for us because our contracts are ours alone and nobody can access them. So we can't get blocked. Whereas I know other brokers who rely on domestic insurers like Intact or Aviva or Canadian Northern Shield. Once the broker has approached those companies, then no other broker is allowed to approach those companies. So it's, I know there was a question asked prior about broker blocking, and that is something that does occur in BC and on Vancouver Island. But because there are fewer insurers able to write strata insurance, it's not as common now as it previously was. And then what else do we need to obtain a quote? Well, we need the underwriting information on the building. So, and there's a lot to talk about actually in the underwriting information of the building. So we're talking about the actual construction of the building. So I'm going to just speak to, say, if it's a 3 or 4 story building, as opposed to obviously a bareland strata or a townhouse complex. The construction is really important, whether it's frame or a fire resistant building, which are the 2 common construction types we see on Vancouver Island. So frame buildings are, it's funny, frame used to be very difficult to insure because of the fire hazard associated with it. But now the insurers have realized that because of the earthquake hazard that there is on Vancouver Island, they prefer frame over fire resistive at this point anyway. So that it's done a bit of an about face on that. So yeah, we need to be able to know the type of construction. The age of the building is really important too. Insurance companies are looking at older stratas, and by older I mean 1990 is usually about the cutoff. As anything prior to 1990 may be treated differently for deductibles and that sort of thing, because the chances of loss are greater just because building systems are getting older and the possibility of them failing is greater. So they may rate it higher or put a higher deductible on in the event that that one of the building systems fails. The number of stories is also important. And again, that just goes to the earthquake rating component. So taller buildings are more likely to be damaged in an earthquake as opposed to shorter ones. And then we also need to look at the type of heat, the roof, the plumbing, and the maintenance and updating that's been done on those particular systems. So if the plumbing is really important, if you've got a building that's got poly B plumbing in it, it's very difficult to insure poly B plumbing. And also if you've got a roof that is 20 years old and needs updating that hasn't had updates, there could be a problem in getting coverage on that sort of a situation too. Fire protection is the other component that they're really looking for. So is there sprinklers in the building? That's ideal. Is there at least alarms? Smoke detectors, I think, are in every building now. But yeah, what other kind of fire protection have you got? And then the one area that's become very, very important when looking to obtain a quote is the claims information. So what is the history of claims at your property in the last 5 years? I've seen accounts that have had, just 1 or 2 claims that in the last 5 years that have been hit with some pretty significant increases in rate or deductible as a result just of a couple of claims. I've got other buildings on file now that have had, 8, 9, 10 claims in the last 5 years. And that's a really tricky situation because the insurance company will look at that and it's almost like the Strata Council the Strata is using the insurance policy as some kind of a maintenance contract. And insurers are not going to look favorably upon that at all. So it's really important to manage your risk and manage your claims. And I don't want to say that you can't make claims. That's not the point at all, because obviously buying insurance, the whole point is to have coverage for situations that arise. But what I am saying is be careful about when you're submitting claims that they're for appropriate levels. So if you've got a 5,000 water damage deductible, which actually I don't think that exists anymore. I think 5,000 to 10,000 water damage deductible. And you've got a claim that's going to cost another $1,000 or $2,000 above that deductible. It's likely you're going to be better off if you just take on and pay those claims on your own and save the insurance for any significant loss that occurs. It's just the way the market is right now. It's you're going to benefit from being able to actually have coverage and not have difficulty renewing your coverage when the time comes. And then what else do we need to get a quote? Well, of course, we need the building limits. If you have an appraisal, we 100% recommend having an up-to-date appraisal. I've seen building costs in the last few years, and I've seen hundreds of appraisals, and I don't think I've ever seen an appraisal where the value of the building has gone down. It's really important to stay up to date and current with your building limits in the event of a total loss. And it also is a requirement of the Strata Property Act that you'd be insured to 100% of the full replacement value. So appraisal is really the only way to accomplish that. We also need to know what liability limits that you need. So for general liability, which is your slip and fall or something that could occur on your property, but also directors and officers liability, it's important for you that serve on strata councils to make sure that you're covered properly in the event and you get sued, because there's no way that you want personally to be affected by volunteering your time. And I know it takes a lot of time to sit on a strata council. You don't want to be penalized for any decisions that you're making. So make sure your directors and officers liability limits are adequate. And then there are some other bolt-on, we call them bolt-on coverages that we offer. Different brokers have different things that they include in their strata programs. These are additional benefits that normally we don't charge for, or they're very minimum premium for. You can get coverage to include volunteers if they are If you are out doing landscaping or gardening or painting or something, then volunteer coverage, if you get hurt, it will actually pay a death benefit as well as hospital benefits and dental benefits and that sort of thing. So volunteer accident coverage is a valuable coverage that you should have. Again, if you're volunteering on behalf of the strata, you should get some benefit out of being a volunteer. And then there's other coverages as well, like legal expense coverage. This is a fairly new product that you're probably seeing attached to a lot of your policies. And what this will do is provide basically a telephone advisory service, a telephone legal advisory service to answer questions related to legal matters that may come up around the strata. So it's really good for volunteers, especially who might not have a legal background. And it basically, if you have a question about how to prepare your bylaws or something like that, then questions like that can be answered with the legal expense coverage. So those are sort of the main bits of information we need in order to actually get a quote. The other discussion topic I had was, what are some red flags that insurers are looking for? So when I send a submission to them, what are they looking to the strata to see that might give them pause to either not write the policy at all or impose some kind of restrictions or high rates on it. And I'd already mentioned the older buildings pre-1990. Older buildings are fine. We can totally insure older buildings, but what they're looking for is to make sure that there's updates done to the plumbing, electrical, and roof are sort of the main areas that they look at there. And they want to see that there's regular maintenance that's performed by the strata. So depreciation report will show that, and a depreciation report will be valuable in showing what work needs to be done and what work is being done. And that's becoming a valuable tool for underwriters to assess the quality of a risk as well. So going forward, you're probably going to see more and more brokers looking to get a copy of a depreciation report, especially if you've got an older building. I mentioned already, as far as red flags go, I mentioned loss history. Just to note that they look for frequency and severity of losses. So if you had one fire loss for $1 million in the last 3 years, that's a big loss, but it's not as bad. They're not going to look at that as bad as if you had 3 water damage losses in the last 3 years, because the fire loss is a single event that it happens, and that's why you buy insurance. But if you have 3 water damage losses that are similar, if you got a couple hot water tanks that have blown, or if you've got a couple pipes that have blown, then that tells the insurance company that there's likely going to be more claims associated with that type of an event. And that's where they're going to see some higher deductibles or restrictions put on the policy. Other red flags, I already mentioned the large accumulations of property. And that's, again, just a matter of the insurance company's capacity or their ability to write significant larger limits. And again, there's few of us on Vancouver Island that have the ability to write those larger limits. And the other consideration they look at is a multi-level building. That is a 5-6 story building. They're going to look at that differently than they are going to look at a townhouse complex for several different reasons. And number one, the larger one, or the larger building, likely if there's a water damage loss on the 5th floor, it's going to be significant because it's going to make it down to the 1st floor, and it's going to be a significant loss. Obviously, a townhouse, if you blow a pipe in a townhouse, it's only going to affect 1 unit. So again, it's a way for them to sort of mitigate their losses by focusing on ground level or single or 2-story townhouses versus multi-story buildings. So what can Strata do to attract an insurer? So based on what I've said so far, obviously low claims frequency is probably the most significant thing that you need to be aware of at this point. And again, I don't want to suggest that you cannot use your insurance policy to make claims. That's not what I'm saying at all. Just what I'm suggesting is you be smart about it, and then work with your broker to determine if a claim should be put in, if you're feeling it's on the borderline. Looking at your past claims history, again, especially in this market, it's important to be aware of where you're sitting with your claims history and be able to manage it appropriately. What else can you do to attract an insurer? You need to be diligent in updating your building systems. So plumbing is the biggest thing that you can do, manage the plumbing. Doing things like putting in braided steel pipes when it's possible, or putting in water sensors is the other thing. Like, there's a lot of technology that's being developed right now related to strata buildings, and hopefully one day they'll actually build a strata building that's got built-in water detection systems, built right into it, because that's surely one way that's going to attract an insurance company to insuring your particular building. And again, making sure the roof is maintained and dealt with if need to. It's really important to work with all of your owners when you're working at managing risks. And I know obviously a lot of you sit on your councils, and I know you probably have some difficulty. There's probably that one individual that doesn't get it and will continue to cause difficulty for you. And I know that happens. But I guess I'm saying for the majority of people that live in strata need to be aware that when they're buying into, it's basically a business. Every owner in there is incorporated in that business. And so everyone shares in the responsibility of maintaining the business and making sure that it's successful. So by that, I mean, you need to make sure that if a system in the building needs upgrades and you need to put money into it in order to do that, people have to realize that they're a part of that group, and you have to be able to manage to put that money into the maintenance. That's the biggest problem or one of the biggest problems we're seeing right now, is buildings that are poorly maintained because owners either can't or choose not to put money into their strata unit. And all that does is cause grief for all the owners when they're trying to purchase insurance. I think people sometimes forget when they buy a strata, excuse me, when they buy into a strata, that if they were owning their own home, they would have the same responsibility of maintaining that home. But I know some people, when they buy into a strata, just believe that it's strata, it's carefree living, and they don't have responsibilities anymore. So we need to really figure out how to change that culture. I've spoken to the BC Real Estate Association, and they also have asked me what they can do to help with the strata situation that there is. And it's exactly the same message I gave to them, to make sure that their buyers understand when they buy into a strata, it's really important that they become part of that strata and work with all the owners in order to provide a good, carefree living experience. The other, when you're working with owners, some things that should just make sure that you're able to do is provide access to water shutoff valves. I already mentioned upgrade washer hoses to braided steel. Please replace hot water tanks before they fail. That's a really big one, where we pay out an awful lot of claims because hot water tanks blow. And when you dig into them, you realize that the tank is 15 years old and it's got a 10-year life expectancy. And then you ask the strata about who's replaced others, other hot water tanks, or who else in the building has replaced, and realize that they really haven't addressed it. So it's really important to stay on top of that. And then the other suggestion is restrict hazardous activities, such as smoking or barbecues on balconies and that sort of thing. Those will just prevent losses from occurring. So it's just due diligence is essentially what that is. And I'm not suggesting that if you were to have a loss because there's a barbecue on the balcony, and there's a loss associated with that, there's no requirement in the insurance policy, or no restriction in the insurance policy that says that you cannot do that. All I'm suggesting is that that's one way that you can actually cut down on the possibility of a loss occurring. And what else can you do to attract an insurer? Follow the recommendations of the depreciation report. It's really valuable information in that report, and it's especially again in older buildings, making sure that it just shows the insurance company that you are interested in maintaining the building and making sure that losses don't happen. So following those recommendations is really important. And then the other thing, if your building allows short-term rentals, that's fine. Like, there's no issue with that unless the whole building is short-term rentals. Then it could be difficulty insuring that sort of a property. So the fewer there are, the easier it is to insure the building with short-term rentals. And the reason for that is obviously a strata building on its own without any short-term rentals, all the owners are there, they're all invested, and they're all wanting to make sure that they take care of the property. Whereas a short-term rental, that may not be the case with whoever is renting that particular unit. So you just want to make sure that that you control as best you can what happens in those units. So what to do if terms have changed dramatically? So this has probably happened for the majority of people that are on this call, where you've probably got your insurance renewal. And I know if any of you are my clients right now, you're probably seeing some increases anywhere from 10 to 30% in the last month or so. I don't think there's been a policy that I've renewed since November, actually, that hasn't had at least a 10% increase on it. So everybody I know is getting hit with increases. So what can you do? Well, first of all, communicate with your broker in advance. And by that I mean, brokers don't always get terms from the insurance company. Usually I'm lucky to get terms more than 30 days in advance. I know some brokers, I've heard stories that they're giving terms like the day before the renewal is due. And that's not always their fault. It's sometimes is the insurance company will wait till the last minute, or perhaps the broker is doing their best to shop the market to find you a better option. But you should, if you know that there's going to be a problem arise, you know there's been a few claims, you know you have an older building, what have you, get in touch with your broker and just check with them and make sure they're working on your policy and find out if they expect any significant changes. And by significant changes, I'm not suggesting that premium increases are a good thing at all, but there are I know some brokers out there that have trouble getting insurance at all for some buildings, and those are the ones that I'd be more concerned about. If you're not happy with your terms that the broker gives you, then you can certainly look for alternate terms from another broker. As I said, not all of us deal with the same insurance companies. So what one insurer or one broker provides, and there is another broker out there that might have an option where the insurer actually prefers your type of property or the location where you are, or what have you. So there are other options for you out there. If you do get a large increase, then there is the possibility of taking a higher deductible in exchange for a premium reduction. Now, there's an advantage to taking a higher deductible in that, as I said, it's not to your advantage really to make small claims anyway. So if you know you're not going to make a claim under $10,000 because it's not going to benefit you, then suggest that you take a higher $10,000 deductible, and there could be a premium savings for you in doing that. The other thing that the other way you could save is the earthquake deductible. Most earthquake deductibles are at 10%. And if you're willing or able to go from a 10% to a 15% earthquake deductible, then that does change the earthquake loading that is charged. And there could be or should be some savings for you on that side of things. So it's something that is, it's worth looking into anyway. You can use technology to help mitigate losses. So I mentioned before, if you've had a series of water claims in the building, and you're able to install water sensors, then that's something that you could do to obviously change the terms of your policy. Or if you agree to change out all your hot water tanks, as a building, those sort of things will certainly should be able to get you a break in the rating that could be happening. And then after, if you've done everything that you possibly can do, and the broker's still unable to find you full replacement value coverage, then it's in your best interest to seek a legal opinion on your next steps. By not having full replacement value on the building, then you're technically contravening the Strata Property Act. It's beyond your control, it's not your fault, but at the same time, if you're sitting on the council, then it's important that you cover yourself and know what the next step should be. I'm not a lawyer, so I can't provide advice on what that would look like. But again, it would be in your best interest to seek a legal opinion and see what advice that they would have to give you. Okay, so I have just a couple minutes left, and the last topic I had was what does the future hold? So if we look into the crystal ball, gaze into the future, I see a lot less hair, actually, is the first thing I'd see. But it's really, really, really hard to predict right now because COVID is such at play. We don't know what's going to happen related to COVID. We already know that that out of Lloyd's of London, they're predicting 80 to $100 billion of losses related to COVID. And Lloyd's has already lost over $100 billion in investment income. So if you add that together, you get almost $200 billion of losses just related to COVID. I also looked to what's going on in Florida with the hurricane season. And that's Florida, it's always a bellwether sort of situation with hurricane season. You can always tell what's going to happen to the insurance market. And from hurricane season, it looks like the market is getting harder related to hurricane season as well, which is not good news for the insurance industry either. So I think obviously this hard market that we're in is not going away anytime soon. And not to be the bearer of bad news or anything, but I think it's really important that when you're doing your budgeting for the next year and maybe the next 2 years, you are budgeting to look at increases of likely, and I can't say how much, but I would say a minimum of 25% over the next 2 years, 25% a year for the next 2 years. That's, again, I'm just totally ballparking and looking at what's happening right now and what could happen in the future. So I would rather that you were prepared than not. So as I always tell my clients, I always want to overestimate what the increase is going to be for you, because I want you to budget over and have money left afterwards rather than the other way around. So that's my prediction, I guess, for the next year or possibly up to 2 years longer. So I think that's all that I had related to the discussion topics. And Wendy, I'm not sure how you wanted to manage the questions, but I'm happy to answer any that you might have for me now.
Can everybody hear me?
I can.
You can. Okay. I thought I was muted this whole time. Yeah, there's a bunch of questions. I'm going to try to get to them. If anybody has typed your question into the chat, will you please retype it into the Q&A, because it's too hard to watch both lists at the same time. So I appreciate that. So we've got a real variety. So I'm going to go from the oldest to the newest, just because that seems the most fair to go. We've got a couple about related to fire. So I'm going to just mention them both since they're related. Are owners required to maintain their buildings? Oh my goodness, nobody can see me. Let's change that.
Yes.
I don't want to be this ghost. Are owners required to maintain their buildings according to the applicable fire codes and standards to maintain their coverage, and what are the ramifications if they don't? And that kind of also fits in with, what if you have volunteers doing your monthly fire checks instead of professionals? That whole idea.
Sure. From as far as insurance goes, there's no restriction or requirement in the insurance policy for anything related to those fire checks. So insurance is going to cover you no matter how a fire starts. And well, shouldn't say that. If it's arson, that's one thing. But for if there's any other type of situation, you're always going to be covered for fire. As far as volunteers doing the fire checks, that's great. As long as somebody's doing the fire checks, then as far as I'm concerned, that's due diligence, and there would be no ramifications of volunteers versus professionals. There you are.
There I am. Yeah. So I had to click a button. Okay. So the next one, if you're in a bare land strata and it doesn't have any buildings shown at all on the bare land, the question is, are there going to be any policies tailored more to bare land? Because it seems like they're being asked to insure the buildings, even though they're not buildings on the plan.
Yeah. No. Normally with bare land stratas, sometimes there's property involved in underground services or roadways or street lights or things like that. And though it's they're not buildings, they may actually show up on a policy showing as buildings, because policies are generic, and by saying calling them buildings or property, then it pretty much covers off everything that could be structurally on that bare land strata. So it's all in the wording of the policy. And don't forget, we use the same policy wording for a bare land strata to a 200 unit 10-story building. It's actually the same wording that we use for both of those situations. So we need to, rather than adapting to every individual policy, it's just so much more consistent if we're able to use one wording. So it just might be the way the phrasing is on those policies.
So it's a good idea to talk to your broker.
Absolutely.
Yeah. Okay. Here's a question about if an insurance company has to reinsure, say 80% or more, what is the additional cost to that the originator would incur? I'm not sure if that's something you can answer.
Yeah, I don't really understand the question or what the intent of that question
When you have
is.
reinsurance, it's not just reinsurance specifically on one policy, it's reinsurance for the entire brokerage. Is that?
Well, reinsurance is actually the term used for the insurance company's insurance.
Right.
So reinsurance is used by the insurer to cede off the catastrophic losses that could occur. So in the event that there's an earthquake, for example, then an insurance company would buy reinsurance, maybe $100 million of reinsurance. They would buy, just in the event there's an earthquake, then it doesn't come out of their pocket, it comes out of their insurer's pocket. So reinsurance is a whole nother level of insurance.
Right. So it doesn't affect just one building's policy. We're talking about something broad.
It's a really broad one that you won't see reinsurance at the street level, so to speak.
Okay. There's a question about, are the insurance companies, when we're talking about things like water sensors or water leak detection systems, are insurance companies looking for specific systems or just any device? Do they
The
care?
insurance companies would just love to have something. It doesn't matter what it is. If you can prove that you've got something that will detect water leakage, they will be thrilled, absolutely excited about it.
Okay. Can you explain the math in coinsurance? And then it says, and how to avoid. I know they've said copay, but I think what they mean is coinsurance.
Yeah, so it's a good question. I didn't mention it in my chat there, but if you have an appraisal, an up-to-date appraisal, then you really do not have any coinsurance on your policy, which is great. We provide what's called stated amount coinsurance, which means that whatever the appraised value is, that's the value that's on the policy, and that's what you would get paid in the event of a total loss. If you do not have an appraisal and you're guessing at your value, then you need to make sure that you insure to, normally there's a 90% coinsurance clause in the policy. And there are some 80%, and maybe that's where this question came from. And that just means that you need to insure the building to at least 80% of its true replacement value. And if you do not insure it to 80%, then the insurance company is only going to pay you out to the extent, the amount that you actually insured for. So if you insured 50%, then they're only going to pay 50% of the loss, and you become a co-payer of the other 50%. Clear as mud on that one?
Clear as mud, yeah, exactly. Yeah. We have a number of questions that are very specific, so I will send those to Shawn afterwards. So I hope I'm not trying to slight anybody here. I'm just going to look for ones that might be of general interest and that we haven't already basically answered. This one I think you can answer quite quickly, Shawn. When we talk about a possible 25% increase, does this affect townhomes as well?
Yes, that's stratas in general. So even the Bearland ones.
Same as Bearland, that was the next question. This is an interesting one, wondering what sort of claims have been connected to COVID that would come to $80 to $100 million?
Yeah, it's surprising, isn't it? The most common one is cancellation insurance. But there's also been quite a number of, like if we're talking worldwide, there's quite a lot of programs and policies out there that had business interruption coverage related to a pandemic or disease, because there actually was that product available. And even I was reading today in the aviation industry, there's companies that actually guarantee loans for aviation. So because these planes that aren't flying, they still have payments of up to $300,000 per month for an airplane, and those loans are going into default. So the loan guarantees are actually now COVID claims.
Wow. So
it's huge. The stuff that I'd never heard of before.
What do you think of the older buildings who are getting seismic upgrades? Is that something that the insurance companies are going to like, or do they care?
Well, they do. Yes and no. But the purpose of a seismic upgrade is to save life. It's not to save the property. So from an insurance perspective, you want everyone to come out safely, but from an insurance perspective, seismic upgrading actually doesn't really help preserve the building in the event of a seismic event. It's still, you will get better rating if it has been seismically upgraded. There is some benefit to that, but it's not as much as you might think that it is.
Right. Some of these you just answered, so I can't read fast enough. Oh, we got somebody who wants legal advice. Nope, can't do that.
Nope.
You mentioned that some market blocking exists in BC. However, you also said that we should seek another broker if we don't like the terms of our renewal. How can we do this with some brokers refusing to accept new clients because of the blocking?
Well, the broker wouldn't not, did I say that right? The broker would still accept the person as a client if they have the ability to place the business. So as I mentioned, for some brokers, like I'm not the only one that deals directly with Lloyd's, but as a Lloyd's broker, no one can block me, so I'm available to quote if it's available. Other brokers that deal directly just with domestic insurers, they may still accept the person as a client, and they may have access to other markets that client doesn't have, or the other broker doesn't have. So there are some brokers out there that only have 3 or 4 insurance companies, and that's all they've got. So if you go to another broker that has a different set of 4 or 5, but there's a couple overlap, then that's where blocking could occur. But it's still, if you go to another broker, then they're going to do everything they can to try to help you, I'm sure.
Yeah. What do you think? You've talked about ratings. You've talked about the difference in pricing between, say, the mainland and the island. What do you think about the small towns on Vancouver Island or the low-rise buildings?
Yeah, it's Vancouver Island, again, is in general, I think we're still getting pretty relatively competitive rates on all of Vancouver Island. So like I've been seeing quite a lot actually lately up in Qualicum and Courtney and in those areas up there, where we can be quite competitive in those areas versus, we also write in Vancouver, and we've been writing a lot in Abbotsford and Chilliwack, but we don't write anything in downtown Vancouver because it's the rates there, although they're very high, it's just not an attractive area for us to do it. So we sort of, the small towns, as long as there's fire protection and the building itself or the strata itself is in good condition, then they'll benefit more than they would in Vancouver.
In terms of maintenance, do you think there'll ever be something from the insurance industry that will help define what's acceptable maintenance? I know the general comment was that if we keep things well maintained, that's a good thing. But we know some repairs are good, some repairs are awful.
Yeah, no, and that's a really good point, and I'm glad you brought it up just because I forgot to mention it. One of the other hats I wear is I sit on the board of the Insurance Brokers Association of BC, and well, I will for another 2 weeks, and then I'm finished my 6 years there. But one of the things that we're creating there is a strata handbook, and it's about 20 pages or so long, and it gives all the ins and outs of insurance, strata related insurance, and that should be coming out in the next couple of weeks. So when that gets out, maybe I'll send that to you, and you can distribute it to the members, VISOA members. But in that, it talks quite a lot about maintenance and a lot of the different recommendations that there are, at least from the Insurance Brokers Association perspective.
So here's an interesting question. It's come up in various themes in these questions. If someone's done something big, they've fixed their building envelope, or they've put in fob systems instead of keys, or a couple of others, they're asking, are they ever going to be rewarded for doing these things by having premiums drop rather than stay the same or go higher?
Well, I'm not sure. Like in business or commercial insurance, they don't actually give discounts like you see in home insurance. They don't give discounts, but what they do is they do analyze and do a risk assessment on the entire risk. So if you can present a risk that has things like, key fobs and, again, sprinklers, alarm systems, that sort of thing, then that whole risk evaluation will lend itself to having a better overall rating than a building that doesn't have those. So although they might not see a direct decrease, they're probably still going to be a better rated building than the one next door that doesn't have those.
Right, so not a decrease, but maybe not such a big jump.
Yes, exactly. And
right, yeah. Okay. Somebody's asked if the condo has or if the strata has a bylaw about replacing hot water tanks. Is the insurance company ever going to ask to see who's replaced them. And I think that also falls, there's been another question similar with the water shutoffs, for example.
The only time that they would ask or it would come up is if there's been a situation where there's been multiple losses related to those things. And then at that point, the insurer may come in and say, okay, we want to know how many of the units have replaced their hot water tanks. You know, and if 50 unit building and only 10 have replaced, then they may decide that they're not interested in insuring it. But if 45 of the 50 have, then yeah, they're probably gonna be okay with insuring it then.
We have a lot of questions, so I think at some point, Shawn, you have to tell us whether you're finished for the night, because I can absolutely collate a lot of these questions and send them to you afterwards. And there's a few on the Strata Property Act side that I can answer as we end. So if anybody had a question that had to do with something sort of on the more legal side of the Strata Property Act, hang in and I'll type the answer to you as well.
Yeah, no, I'm happy to, you know, if you want to go on another 10 minutes or so here, I'm happy to do so. Otherwise, I'm happy to, it might take me a day or two to respond if there's that many questions, then it's probably easier for me to answer now than when typing not super fast. So.
So someone's asked an interesting question to put this all into perspective. They're asking if insurance for single family homes has also been significantly increasing.
It is, absolutely. We also sell personal insurance and we're seeing rate increases there of 10 to 15% across the board on average. But it's certainly not what Stratas are seeing or business insurance in general is seeing, but it is certainly a hard market. It keeps coming down to capacity to write business on Vancouver Island. And whether you're a $1 million house or a $10 million strata, you still need to have an insurance company to cover that $1 million or that $10 million. So it's rates across the board are going up.
Depreciation reports, you mentioned that we should be following them. What do you think about people who haven't done them at all, or stratas that haven't done them at all?
Well, as I mentioned, it's not something at this point that the insurance companies are asking for specifically. So I want to say this the wrong way, but you can kind of get away with it right now. I don't recommend it because obviously it's a valuable tool in knowing maintenance of the building, of the strata, and knowing what you need to have done. Especially if it's an older building, I think that's where it will really come in handy to have that. Newer buildings, probably not that much of a big deal.
Would the insurers ever check the bylaws to see who's responsible for what?
No.
I know that when there's a claim, the adjuster will look at the bylaws, but not at the policy, not when you're getting your policy renewed.
No, not at the proposal stage or the renewal stage. It's not something I've read bylaws before, but it's not something that an insurer has ever asked me to submit to them.
Are claim costs increasing more? I think they mean the rate of inflation this year. Let me just read it. Are claims costs increasing more than inflation costs this year to repair damage versus what it would have been last year on Vancouver Island?
Yeah, I think we are seeing that just because, especially on Vancouver Island, all the restoration companies and contractors they're really busy. Like they're screaming busy. They have not had any kind of slowdown at all related to COVID or anything else. And just because there's a high demand for them, again, we go supply and demand enters into this analysis as well, where costs are definitely increasing because contractors can charge more because they know that there's a shortage of them around. So yeah, we are definitely seeing those costs increase.
I think we need to have you come back, Shawn, and do one just on bare land. Because I'm seeing a lot of confusion, and most of these questions can be answered from the Act side, not the insurance side.
Okay.
So there's a couple of Bearland people. Hang on, and I'll type you some stuff afterwards too. Should we expect insurers to come into each unit to check things like the hot water tank age and whether or not we have metal? No, we're not going to come in and check those things. That's up to the Strata's bylaws. And
quite honestly, like I rely on information from an appraisal, or I will Google a location. Like it's just honestly, you don't have time anymore to go out to each building. And like I say, we write all over BC, so it would be very difficult to do that on-site inspection. On larger properties, there's some local around Victoria. You know, I will certainly, if I don't know the building, I will certainly do a drive-by. But no, I would never go into a unit.
We've had a general question about what's the difference between a depreciation report and an appraisal?
Well, the appraisal gives the actual valuation, the replacement value of the building. So it describes the building in detail and gives the value based on the building, all of the demolition and debris removal costs, all the other costs associated with rebuilding a building. Whereas depreciation report is quite a detailed document to provide the description of the building and how it's aging and what's going to be required for maintenance and the costs associated with that, and basically how to budget to take care of that building to make it last over a number of years.
Okay, well, I think we're good. We're starting to get questions that are repeating what we've already had, but I'll just remind everybody that we have taped today's seminar, or webinar, sorry, and we are going to be posting it. So give us about a day to get that up on YouTube and get the link on our website. And also all of these questions, give us a few days. There's a lot of them, so give us a few days to compile those so that we can put together a document. And actually it might take more than a few days. There's a lot here. And we'll get that up on the website as well. And just thank you everyone for joining us today. We had a great response signing up to this. And I think there's a lot of material here. We might have to do some more on insurance just to cover some of these other aspects.
Yeah, and I certainly it was a pretty high overview of things, and I wasn't able to get too detailed, and I apologize for that. But I hope I didn't go too fast for people, but I'm happy to answer questions from people as long as, like you say, they don't expect an instant response.
Right. Okay. Well, thank you so much, Shawn from Seafirst Insurance, and we hope to have you back another time.
Sounds great. Thanks, Wendy.
Okay. Thanks everyone.